Steve, short-term annuity, long-term annuity. Why would I use a given one in a given situation?
Yeah, I mean, it's a
Talk
good
me
question.
through that.
It's a good question. I mean, we get this question often from our agents too, because sometimes clients have different goals in mind, or they're at different ages in their life where maybe someone's a little bit younger, maybe a little bit older, and there are annuities with different surrender terms. It could be 5 or 7 years, 10 or 14 or 15 years. So the decision on whether or not to go with one or the other, there's a lot of different variables that go into that.
So just in general, just from the carrier standpoint, maybe what is in it for the agent or the client, more for the client, I guess, if they choose a longer term versus a shorter term annuity. Obviously, there's got to be some financial incentive, right?
Yeah. So look, the shorter term, you're going to find clients that maybe are more comfortable with a shorter duration. But the other obvious thing is if you go with a shorter one, 5 or 7 years, you as the agent has an opportunity to write another piece of business 5 or 7 years down the road. But there are some specific, key things that clients might like about the 5 year. Again, like I mentioned earlier, comfortable duration. They may be younger. They may be in their earlier 50s, and they're just kind of a little bit too far off from their actual retirement date. And they want to start protecting that investment before they put it into an annuity for an income rider. And they could put it into something for only 5 or 7 years, get some growth out of it. And then they can really focus then on their goals about retirement. But their goals can change throughout that time period, so they can get maybe a little bit more fine-tuned on that.
Right. But a good general rule, would you agree, is that the longer you're willing to commit your money to the insurance carrier, the longer surrender period that you should choose, the more financially incentivized you will be in terms of higher payout rates and higher interest rates that you're going to get for those products.
Right. So that's the other thing about having that decision and going into it is if you go with a shorter duration, typically you, the agent, there's going to be a lower commission rate for you versus if he has a 10-year or a 14-year, you're going to find that your commission rate is a little higher. But in the return on that is the client will also see the difference when it comes to their participation rates or their caps that they'll see on their indexes. A lot of times, not always, you'll see lower caps or participation rates on the shorter surrender periods, which could hinder the amount of growth that your client could see in their account value. Versus if it was in a 10-year, they're going to have higher caps and participation rates, so they're going to have an opportunity to get more interest growth on their money.
Well, yeah, Steve, I can speak personally from my own experience that we worked on earlier in the year is I had some annuities that you had helped me with a couple, 3 years ago, right? But better products came along and it financially made sense to move those annuities over and to take advantage of some of the bonuses, the higher payout rates, the higher guarantees that they could get, less performance based products and more guaranteed products. Could you talk about that a little bit, maybe?
Yeah, and that's the thing that's interesting about leaning on us as a team here. We keep our thumb on the pulse of all the annuity industry. So when there's new products that come out that may benefit you more versus having the product that you had prior that was older, newer products are coming out, newer innovations are coming out, different indexes or triggers or higher payouts with income riders. Maybe a higher bonus that you can get, help grow your money faster. Those are all different things that come about, during, your lifetime when it comes into your retirement. So if having shorter durations on your surrender periods can sometimes be beneficial and allow you to be more flexible with what you do in retirement.
Is it fair to say too that often it's overlooked by producers, particularly ones that don't produce annuities on a regular basis, is that these products change almost a weekly basis. They do change on a weekly basis based on the interest rate environment we're in and the economic conditions that the insurance carriers can take advantage of. Could you elaborate on that a little bit? Because that could help facilitate some opportunities for agents as well. Would you agree?
Yeah, that's the thing. If you aren't writing a whole lot of annuities, but you want to follow along with our newsletter, these videos here, reaching out to us to know if there's any changes that are coming about in the industry, and knowing that there are 5 years or 7 year surrender periods versus 10 or 14, just knowing that at least is you're in a better stance than never knowing anything at all, and being able to portray that option to your client so that they can make the best decision for themselves in their retirement.
And I can vouch for the fact that both as the consumer as well as the agent, by converting those annuities over earlier in the year, not only was I able to put myself in a better position for retirement, in some cases, doubling the retirement income from those annuities, but also as the advisor making the commission. Steve, I can't thank you enough, and I promise to get the check in the mail.
Yep. Well, and again, so just like with his example here, lean on us as an annuity team that can be your expert in this area. We'll help you with the case design stuff. And, with that, on behalf of Paul, Steve Allison on the annuity team, happy selling.